Hello, once again, Dave Knight here at 123daytrade.com. Thank you for watching. Thanks for being here. We're at the whiteboard again. But today, actually, I'm feeling generous today because just am. And we're going to cover a little portion of my spreadsheet. And you can notice the last day that I actually traded um, was November 15th of 2018. So I've had pretty much, what is that, December, January, February, 3 months, 3.5, let's just call it 3 months. 3 months off um, to think about what I want to do and how I want to approach this particular combine. Now, um, TST obviously is the drug of choice, TopStep Trader, and we're going to talk about the 30K combine and talk about the $500 loss. You have a 2000K profit target and a 1K 1.5, right? 1.5K loss. So let's just double check that because it's been a while since I looked at the let me screen draw stop that. Let's get this up. Let's go to TopStep Trader. That's how long it's been since I have thought about it. Our program. So you can, all right, so yeah, let's look at this. That's a dashboard. All right, so 2,000 profit target. All right, so here's the rules, right? Monthly price 150. That's your fixed cost, right? And say a $100 reset. Let's not get into that right now. Let's talk about this is actually not true. 500 daily loss limit. If you cross the $500, you actually lose your combine. So let's remember that it's roughly $490, $495 to be on the safe side. I would tell you that 49 ticks in the crude oil market is more than sufficient. You don't want to get anywhere near there, but we've talked about that in the past and previous. Now, so 2,000 profit target, and you have a trailing max drawdown of 1,500. So let's get back to our drawing board. So what does this mean? Actually, a really good video if you're going to watch it. It's by a man named Adam. I think his last name is spelled K-H-O-O. Let me look back through my notes again. Yeah, K-H-O-O. And he did something that I have done in a previous video. Basically, trade like a casino. So you could go actually to my content on 1-2 day trade, and you can see the same type of information that he presents on his video. If you just search Adam Coe trade like a casino, you'll probably find his video. So what's the synopsis of what I've taught to what he's teaching? And it really comes down to the 3 rules of trading. First, cut. Second is cut losses short, excuse me, is number 1. Let profits ride is number 2. But number 3, remember, is take profits on the ride. Now, what was my key to victory in the combines, the nine funded combines that I got into and made money? What's the key? What was the key to victory that got me in 4 years' time into 9 funded accounts? Let's talk about that. The bottom key to it is allowing yourself to take more away on your wins than what you're willing to lose on your losses. That's really the honest to goodness key to victory. Now, how does that translate out? Let's go back to what I would call a concept from Van Tharp. And Van Tharp, Trade Your Way to Financial Freedom, in his book, he talks about R. R stands for risk. How much are you willing to risk per trade that you're in? So that's what it comes down to. Now we talk about, in the past I've talked about, don't risk any more than 20 ticks in the crude oil market on any given trade. If you're risking 20, then if you're trying to get double, you want at least 40 on the win side. So that in a quick moving market on one trade is doable. The question is, what is your win percentage? Where are you at on that win percentage column? How do you determine what a good trade is as opposed to a bad trade? Honestly, you can make money at a 50-50, and let me demonstrate 50-50. The 50-50, so in other words, you can actually make money lower than 50-50. You can make money, if you do it right, you can actually make money on a 40-60. So you only win 4 out of every 10 trades you put in. You lose 6, you win 4, and you can still be in the winners column. How do you go about doing that? That sounds kind of interesting, right? It really comes down to taking more out on the profit side on your wins than you're willing to lose on your losses. That's the overall key to victory in day trading and also in trading overall. The problem that we as traders run into, most of us that do this, is the columns called fear and greed. It's the psychological component of trading that a lot of us don't like to talk about. This is what kicks my ass as well. The psychology, the psychological side. I guess it's this way, as psych, right? The psychology side of it, spelling wasn't my forte. Numbers are. But when you're thinking about what you can and can't do, right? So for every 10 trades that you put on and you win 4 and lose 6, you can still have a positive expectancy, positive expectancy on a 40% win rate. How is that? Well, if you're taking out 3 to every 1 you're losing, let's think about that, right? So 3 times 1 is 6, and 3 times 4 is 12. 12 to 6, your positive expectancy is $6. You're winning 6 to lose. You're winning 12 to lose 6, and you're still a positive expectancy at 50%, right? So, and that's on a 40-60. So only winning 4 out of 10 trades. That's how you can do it. Now, question is, can you get 3 to 1? And that's what we talked about in my previous videos, 3P profit target versus a 1R risk. It's doable, and is it at 40%? This is where the sticking point comes in. When you're in a profitable trade, the 1R is easy to hit, right? So for lack of a better way of putting it, let's say you're risking 20 to make 60 ticks. Here's where the kicker comes in. If you add 2.25% to this particular area, you're 20, and for every 1p that you're risking, if you're really willing to risk 20, let me do this again. So let's clear the screen and let me show you the key to victory. If your 1P profit target versus your 1R, here's the key to victory. If you're risking 20, you want to be willing to take away from the market on a 1P basis 22.5. If you translate that out, so in other words 22 to 23 ticks, if your 1R is set at 20 on a 1P. On a 2P, if it's at 20, what's that? 22.5 by 2 is 45, right? Is that correct? 10, 4, 5, 4, 5, right? 45. 22, 4, 5. I can't even count anymore. Yeah, but that's 45. 45 to 20, right? So here's where the key to victory lies. In a quick moving market, on a good winning trade, on a good setup, the way that I'm basically going to tell you how I'm going to approach the market to start with is try to keep myself to one trade a day, looking to earn, and if this is the R versus P, I'm looking to earn 45 ticks and only lose 20 on a one trade, on a good setup, so a wave pattern setup that I like, based upon the 1, 2, 3 and everything else, and high volume spikes and all the other things that I've used in my past. But limit myself to one trade a day until what? Until I build up some equity. Now I have a 2,000 profit target, and this is what I was able to hit the 1.5 back in the day. When it was 1.5 to 1.5, I was able to hit that on all kinds of times. This right here has been my nemesis, if you remember. So how do we go about hitting that particular target? Now we want to stay and keep our trades to one trade until we build up at least 1K in positive profits. And I've done this on many occasions. Now once we get above the 1K mark, that'll give us the opportunity to add on a second trade, or maybe even, depending upon the second trade, let's call it T, or maybe allow us to add a second contract when we're above the 1K mark. Now here's the point. We give ourselves a little bit more bang for the buck once we get 1K in profits. If we fall below the 1K in profits, we have to go back to the one trade a day until we get ourselves back above the 1K level. And once we're above 1K, then you know that if we can get one trade that gets us 100 ticks, which we've seen that in the past on a 3P move, if you're set up for a 3P move to start with, you know, you can maybe knock that out on one trade. Now the trick to it is, how much are you looking to start with? This is what until you have that 1K profit into your account, I think the goal, at least the way I'm looking at it right now, is do my best to take profits at 2P versus 1R on one trade. Build up to 1K in profits, and then allow myself to go after that 3P target against the 1R. If it falls back to 1K, I follow the 2P to 1R. When I'm above the 1K, I go after the 3P to 1R target. This is how I am going to set up my trading when I get started back at TST in the near future. Like I said, I've set up to start. I have an appointment tomorrow for the CT scan, so I don't know if I'll start tomorrow or not. I do have the account will be open to me for tomorrow, but I don't know if I might be looking at Friday being my first day, and I might just be looking at the markets on Thursday when I get active, when I get the ability to look at it. So that's the plan, and I might, because I feel generous right now, and since I have some extra time on my hands, is I'm waiting on to get my kidney stones taken care of with the I think it's April 5th right now, as they're telling me, is the most likely date that I'm going to have lithotripsy. It's going to give me some time to enjoy a little bit of what I like doing on the side, and talk about market that I like to trade. The market I like to trade is the crude oil market, and CL in the futures, traded on the NYMEX through the Globex program. I use the CTS T4 platform. So there's some things that I've got to get together on that platform to be able to see. You know, I have to set it up and make sure the things that I have are there, and you know, we'll talk about this spreadsheet. Now along those lines, what I'm thinking about doing for a period of time is putting a live webinar up on Demio. It might be for 30 days or less or whatever, but I'm going to think about that, but if I do it, it'll come into next week. So that's, and I mean, I've done it in the past. I just, you know, it's be very limited because of not just space, but just my time, and I want to stay to the one trade. So the overall goal right now, because if you watched any of my past, where are my weak falls? Where are the wheels on the bike? Where did the wheels fall off, right? Where does that wheel fall off? The wheel falls off when I start over trading. And I allow myself to get close to that $500 loss level. Now, if I keep myself at the 20 ticks, I keep myself at 20 ticks on the stop. I don't know what 1R is, but let's just assume it's at 20 ticks or close to it. And I'm allowing myself to pull out 45 ticks on a win. And I just set and forget it, right? I put it on and I'm willing to risk 20 for 45 and allow the market to do its thing and see what happens. At least this is the plan that I'm going into it right now. What I noticed in the past, some of the trades that I got involved in would win after I already had moved to break even, and then it would go its merry way to its profit target, and I would only get like 2 or 3 ticks from the trade, where I could have had 45 ticks. That was where I look back at my trading, where going to break even. And why was I going to break even? Well, because I had, you know, I was sitting with 30 ticks of losses in that day, and I was worried about going up against max daily loss on any given day. But if I eliminate that problem, in other words, I allow myself the best one trade a day and a good trading opportunity, at least the way, and it has to be set up properly. And you know, of course, I'm starting at the That would be the 8 a.m. 9 o'clock market open that I believe in, or the 8 a.m. 9 a.m. New York time, 8 a.m. And I give myself the best chance to pretty much win. So bottom line, what am I looking to do? It's real simple. Take more away on my wins than I'm willing to lose, and still give myself the ability. And if you think about this, you're willing to take 45 and only lose 20. You can see that that ends up being more than a 2-to-1, right? Or 1-to-2 if you're looking at risk to reward. If risk to reward, this is the risk, and this is the reward, it actually ends up being a little bit more than that, right? So 1.25. 1.225, I guess it is. 1.225 to 1 is what it ends up being. And if you're willing to take the 2 away, then you can see that 1.225 to 1, and you actually end up winning more when you pull out away the wins, and as long as you have the ability to stay in at 2.5 to 1. I guess that would be closer to 2.5 to 1, right? All right, that's it. I felt generous today. I thought I'd share kind of what I'm thinking about right now as an overall strategy and plan as I pull myself back into this arena and get myself where I believe I belong to start with, is in the funded account, and stay there. So I'll talk to you later. This is Dave Knight here at 123 Day Trade. Look forward to seeing you. Talk to you later. Bye for now.